Hi, today is Wisdom Wednesday, and the message today is about being aware of the 2022 mutual fund tax trap. First off, I want to say that this message is only related to taxable mutual fund accounts only. All right, doesn't require or apply to 401ks or annuities or anything like that, but taxable mutual fund accounts. So, why is it such a big deal this year? Well, the reason is that when we have down years in the market, like we've had this year, S&P's been down. Around 20% quite a bit of the year. The bond market's having its worst year ever. So when that happens, a lot of because keep in mind in a mutual fund, there's like a whole pool of investors. So you're kind of like on the public transportation. And as people panic and scramble and try to maybe move out of their investments, a lot of the money managers have to make a lot of sales. There's a lot of trading activity. That trading activity actually creates a lot of potential capital gains issues for you as an investor. So let's say, for example, you have a $100,000 investment, and you're looking and the value of that is down 20% year to date. So your 100,000 is down to 80,000. Then unknowingly to you, unless you've done prior planning, your mutual fund has a scheduled capital gain distribution of, let's say for example, 11% coming up in the middle of December. That means that at tax time, you're gonna have a 1099 and you've got to add $11,000 of taxable income to your tax return in a year where your investment went from 80,000 to 100,000. That makes investors really unhappy, to say the least. But I'm trying to give you awareness ahead of time because there are planning things that you can do to avoid that. Looked at one last week. It was a $300,000 portfolio that had a projected capital gains distribution year end of $42,000, and these people weren't using the money for income, so that's just an extra tax burden. It's one thing if you're using that money for income and you're spending it, then it's fine. But if you're reinvesting, you still get that tax hit. So I have here in my hand 3 of the largest mutual funds in the United States. First one is Vanguard. Here's just a couple examples. One of their funds has a projected capital gains distribution of 11.6%. Another one at 7.82%. Got another one at 10.98%. Another one at 7.89%. American funds, one of their growth funds has a projected capital gain distribution of 8 to 9%, another one 6 to 8%. This Fidelity fund has one that's at 19.3%. So if it's a $100,000 investment, that's a $19,000 taxable capital gain distribution to you, whether or not you're reinvesting or taking it in cash. Here's another one, 11.7, another 8.9, 8.92, 8.43. So I think you get the point. So it is a significant potential tax burden that's going to be hit with a lot of mutual fund investors this year. And I will also tell you that there are a lot of different options. There's too much to go into in this short video, but you need to seek professionals, tax and financial advisors, or certainly you can look to us. If we will give you a free evaluation, what we need is a copy of your most recent statement and also a copy of the cost basis report, and we can give you some free feedback. So anyway, if you act in time, you can help derail a lot of these potential tax burdens you're looking at for the 2022 year. And I'd like to wish everybody a happy Thanksgiving. Have a great day.